Good morning, everyone. Welcome to Midwest Market Solutions Insider Comments on Friday, July the 14th. Thanks for joining us here. We're looking at higher prices in the grains overnight, which I don't think should be a surprise or unexpected. There's a couple people, analysts I'm talking about this morning hotter and drier weather, and I don't really think that's the reason why we're higher overnight. These weather forecasts haven't changed. Some of the forecasts are for kind of dry and hot for next week. There's others that keep temperatures fairly cool. Remember, we came into this week, about a week ago, we were talking about cool temperatures and more rain for the eastern Corn Belt, and that it proved to be very accurate. It's been a dry week for the western Corn Belt, and our clients in the western Corn Belt areas scratching their heads and asking us why prices would drop in soybeans 47 cents yesterday, corn down 15, when their crops essentially are wilting and burning up under hot and dry conditions. We've talked about this before, but it's the funds that are driving prices here either up or down. They drove prices higher in the soybeans, from our low to our high, about $1.40 range. And that was due to them covering their short positions. We came into the week anticipating these funds are now out of all shorts and long, and they don't want to be long after the 4th of July unless there's absolutely a weather reason to. And part of the Corn Belt suggests that, there's some conditions problems. The rest of the Corn Belt's gotten rain, and really there's not issues in those areas, and that's why we've fallen back here. A little short covering overnight, I don't think should be unexpected after 15-cent losses in corn and 45 to 47-cent losses in soybeans yesterday. We should have some sort of a little bounce or a little recovery. I don't think it's going to last or be real meaningful. I don't think you're going to add 30 cents into the marketplace today. The weather isn't suggesting that. In fact, here in northwest Iowa, it's actually kind of cool this morning. Feels real nice out there. A northerly breeze is blowing, but it does remain very dry in the western Corn Belt. Now, in the livestock trade, these cattle markets been very stout in here in the face of some negative news. Lower cutouts all week. Weights increased yesterday, and yet cattle futures hanging in there, and part of that reason is packer demand for the cash market. It was better than expected. We thought we'd see lower cash trade. We saw steady cash trade this week. So maybe cash next week should be lower, and probably will be. Packer demand will probably back off after they fill some needs here, but underlying support should be noted as this packer market still remains fairly tight, even with increasing supplies. Hogs could find a little pressure here from lower products this morning, and we take out about the 81-85 area on the August hogs. Could signal a change of trend there. They are discount to the cash by about $10 and to that index, and July goes off the board Monday. So it'd be surprising to see a lot of selling, but a lot of longs in this market stops below that 81-85 area, and that's going to be the tipping point on the charts, in my opinion. I hope you have a great day. Good luck and good trading. Brian Hoops from Midwest Markets. Have a great weekend as well. I'll talk to you on Monday morning.